How to use liquidity grab strategy in forex trading. If you are thinking about a strategy that involves taking advantage of liquidity imbalances or sudden market movements, here are some general guidelines you might find useful. 1. Understand market liquidity. Liquidity refers to the ease with which an asset can be bought or sold without causing a significant price change. In forex, major currency pairs typically have higher liquidity than exotic pairs. Be aware of market conditions and events that can affect liquidity, such as economic releases, geopolitical events, or unexpected news. 2. News trading. One common way to take advantage of sudden liquidity changes is through news trading. This involves entering trades based on economic indicators or unexpected news events that cause a sudden surge in market activity. 3. Volatility analysis. Monitor volatility indicators or market sentiment to identify potential liquidity spikes. Sudden changes in volatility can lead to increased liquidity. 4. Use stop orders wisely. Consider using stop orders to enter the market automatically when a certain price level is reached. This can help you enter trades quickly during periods of heightened volatility. 5. Risk management. Be cautious with your risk management. Sudden liquidity shifts can result in fast and significant price movements, so it's essential to use appropriate stop-loss orders to limit potential losses. 6. Technical analysis. Incorporate technical analysis into your strategy to identify key support and resistance levels, trend lines, or chart patterns that may influence liquidity. 7. Stay informed. Keep yourself informed about global economic events, central bank decisions, and other factors that can impact market liquidity. 8. Backtesting. Test your strategy using historical data to see how it would have performed in the past. This can help you identify strengths and weaknesses and refine your approach. 9. Adaptability. Markets are dynamic, and conditions can change rapidly. Be adaptable and ready to adjust your strategy based on the evolving market environment. Remember, the forex market is inherently risky, and trading strategies should be approached with caution. It's also advisable to consult with financial professionals or experienced traders and to use risk management principles to protect your capital. For more details, watch my other videos, subscribe, ask a question in the comments, or contact me via email. See you soon.